Welcome to Cambridge House Live. I'm Bridgitte Anderson. Joined with me now is Brent Cook. You are the author of Exploration Insights, an exploration and mining newsletter. You have said that about 95% of the junior miners are not viable. Why is that?
Not necessarily not viable, but not successful. It's just the odds of exploration. It is such a tough game out there to actually competently explore a property and find a deposit that is the end economic. That it's just, those are the odds. Mother Nature's been really generous to geologists and the whole corporate scene here in Vancouver, in that she's scattered millions, if not billions, of geochemical anomalies across the earth. And it's just a fact of nature how things happen. And those geochemical anomalies or geophysical anomalies are what geologists raise money on to go look for and explore. And the odds of any single one of those turning into something economic are actually in the order of 1 in 1,000 or worse.
So there's so many companies out there. When investors are trying to figure out where to put their money, how should they decide that? What's the criterion that you look at?
Well, I think it's probably the same as everybody else has. Whereas management is key. The smaller the company, the more important it is you have management that is aligned with you, and meaning that they've got a lot of skin in the game, and that if you get rich, they get rich, vice versa. That's really important. I think share structure is really key, and I think something that a lot of people don't do in this business is cut bait as soon as they get to a project level where it's just not working. It's not what you need to see in the project to make it an economic deposit. Cut bait, move on to the next one. So many companies, they raise money on an idea that there's gold in this belt of rocks or this belt of rocks, and then they drill the holes, do the work, and it's not looking good, yet they can't cut bait and say this isn't working. And that's a real mistake that happens, and that's why you see so many companies' share structure get blown out, is they keep trying to raise money more and more to find something that's not really there.
Why is that? Is that the geologist being a dreamer?
I think that's part of it for sure. I mean, to be in this business, you've got to be optimistic. And a geologist is, by nature, a very optimistic, easygoing fellow. They're out there generating ideas. And geology is not an exact science. It's sort of part science, part gut feel, and part art. And so interpretations vary between geologists, and it's because there's so little data we're dealing with. I mean, essentially, we're looking at what we can see at the surface, if there's any outcrop at all, and extrapolating to depth, to what might be down there. So there's always hit and miss, and it takes a lot of effort and work to actually find something. But I think the main problem I see in most of these companies is they don't have a clear concept in the back of their mind of what they're looking for actually looks like and what the economics behind it are, meaning they end up being, even if they're successful in finding a deposit of some sort, the effort and the money that went into it and the actual value, or the net present value of this thing, aren't worth the effort. If you're going to look for something big.
It sounds like you're almost suggesting a change in the kind of business model that exists for some of these junior miners.
I think so. I mean, there's one model that you've probably heard about already, the prospect generator model. And I like that model a lot because it usually means the people running it, the company, understand the odds, and so what they do is they generate ideas, conceptual ideas, to the point where it's time to spend the heavy money, and then they bring in somebody else, a major mining company, to spend the high risk, high money, and they move on to another one, and they end up retaining, say, 30% of anything found. But if you figure 95% of those are going to fail, you really haven't lost much, and you've preserved your cash and your share structure. And eventually, and there's a number of companies that have done this, they stumble across something that keeps getting better. The results continue to get better, and they don't bid it out. They drill it themselves. And I could give you a number of companies that have done that, that have been successful, but it takes a long time to find a deposit.
Obviously, a lot of miners here at Cambridge House, a lot in the Vancouver market scene. So what's your read on the Vancouver mining industry? I mean, where do you see them fitting in kind of globally?
They're key. The junior explorers here in Vancouver are key to supplying the gap. There's a gap in discoveries versus production. And I talk about this in my newsletter, and as well I'll be talking about it tomorrow. But that gap is the ounces we're finding globally are a third of what we're actually producing on an annual basis. So there's a gap there of, call it 50 million ounces, that's not being replaced every year. And so it's all these companies out there looking, they're the ones that are going to supply that gap. And that's why I invest in these things. If you can find the 1 in 1,000 company or 1 in 500 company that has a deposit that's going to be large enough and have a high enough operating margin to interest a major to buy it, that's where you make, a stock goes from 30 cents to $3 or $30.
I mean, that's really the ticket that everybody's looking for. So how hard is that to do that kind of evaluation?
To do that kind of evaluation?
If you're an investor, and you're looking at where to put your money.
The honest answer is I think it's almost impossible. This is a very complex business. Mining is more than just a drill hole. It's got to be, you've got to interpret the drill hole. You've got to know what the rocks mean. If a miss is really a good news or bad news. There's just so much that goes into it. And then you go to the metallurgy, then the actual cost of mining. How much is it going to cost to dig this out? Is it underground open pit? How fractured are the rocks? If you're going underground, how much rock's going to fall in with your ore? What's the dilution? There's just so many things that get involved. I really think that if someone wants to speculate in this sector, they should either be in the sector themselves or have someone who can advise them as an honest opinion, be it a brother that's in the business or a newsletter writer or a broker. They'll give an honest opinion on what's good and what isn't.
And you're saying this with your background in geology, so you're saying this with a fair level of expertise. When looking at some of these companies, talk to me about the dynamic between the CEO and the geologist, if they're not one and the same person. How key is that?
It's very important. They've got to work real well together. The CEO has got to understand what the geologist is doing, but he or she has also got to understand how they're going to raise the money for the next round. What hurdles they have to see from the geologist, from the results the geologist produce, that are going to get them to raise the money at the higher level. That's really, really important. To understand the financing of this end of the business is just as important as understanding the geology for a CEO.
Okay, I'm going to switch from geology to geography. Any jurisdictions that you're particularly favorable on, or do all of these kind of criteria apply no matter where you're looking at, with geopolitics aside?
Well, certainly the known belts, the Central Andes, Central America, the Yukon's looking good, Nevada. I think the U.S. is actually a place that people should start looking at moving back into. I think it's kind of been ignored a little bit because of the politics and such and the environmental permitting, but now compared to the rest of the world, it's not as hard as any place else. Places like California, Oregon, Idaho, I think you can go there and, if you pick the right place, you've got a shot. Certainly West Africa is a great place. I'll be going to Tanzania in 2 weeks. There's a project there I'm looking at, Ethiopia, Turkey. There's a lot of good places in the world.
When you're taking a look at what's going on in the world on a macro level, what's your outlook then for 2012?
The market.
Yes, the market.
I think what I think is happening is we're seeing the U.S. on a relative basis improve relative to most of the rest of the world. And I think we're going to see the euro drop by at least 20%, which by relatively looking at it, the U.S. dollar is going to look pretty stable. So I think we're going to see a strong dollar, but I think we're going to see the gold price about even with what it is now, $1,500 at the end of the year. But we're going to see the gold price go up a lot in euro terms and that sort of thing. So companies operating in Europe, paying in euros, their profits are going to go up 20% if this all comes to pass. Assuming there's no big blow up, I think it's going to be a decent year, but you've got to be very, very selective in what you buy and keep track of exactly what's happening with your company.
Are you seeing growth slowing out of Asia, or do you still see the demand very high for?
It's slowing. It's slowing for sure. I don't think it's going to go off a cliff. It's slowing. I don't think it's a big issue. I think we'll see copper prices about stable. Gold, I think we're going to see everything about stable through the year, like this, but in the long run, it's stable.
All right, well, we'll leave it there. Thanks very much for joining us, Brent. I really appreciate your time.
Thank you, Bridget.